Our stock of the day, I thought we'd take a look at Sigma Healthcare, pulling full-year guidance, but expects a return to profitability in fiscal 2023. This as it swings to a full-year net loss of just over $7 million due to higher infrastructure spend and in line with the previous government guidance. Revenue up just over 1%, even though shareholders can expect a 1 cent dividend. Trading so far today pretty flat by the look of it. Mark, what did you think? Mark G, what do you think of Sigma?
Oh, look, it's not really the sort of company we're looking at the moment. That healthcare sector's sort of, in Australia, I think it's been a little bit unfairly beaten down. I think they're out, companies like Fisher and Paykel, for instance, recently outlined, upcoming costs, and we're sort of being honest with the market, and have dropped pretty considerably. But there's some world leaders in that space at the moment, like CSL, Fisher and Paykel, etc., that different businesses, but within the same sector that I'd much rather have on, which have better track records and more upside, and as well, look, something like obviously Wesfarmers taking over API gives them the ability of scale now as well, and their competition to Sigma. So look, it's a bit of a legacy business. It's got it's all this capital expenditures to make it more efficient. It is getting to the end of that CapEx cycle spend. So next year should be better overall, but realistically, the competition from a company that was doing it better with less resources has now got more resources. So I don't think I'd be, and Wesfarmers pretty cheap at the moment as well. Obviously, you get a whole basket of other things as well in that. So look, I'm pretty happy to avoid it for the moment.
Better options elsewhere.
I think there's better options elsewhere. Yeah.
In that sector, Mark.
Sigma's. We've looked at it over the years, and it's basically been what we class as a mediocre business.
Right.
The pharmaceutical area is hard. You don't make a lot. It's very, very competitive, and there is a duopoly in the market, but it's very it's a tough area to do well in. And as you said, they've increased overheads and so on, and they've always been just okay. We sort of don't want to invest in just okay businesses.
Right.
We want to invest in businesses that have decent earnings growth and tailwinds and so on
to
get a better return. Having said that, it is in the green from our point of view because it's come down so far. It's currently on a PE of about 6.9, trailing, which is it's still cheap. Now the thing is, once they probably will come back because this is a reliable business. It's not like it's going away. There's no risk of the business failing. So if you look at it on a 5-year horizon, we're showing it returning about 13% a year, likely based on its historic performance. So that's assuming it just gets back to its mediocre status.
Right.
But 13% is good.
Yep.
And it pays out a fair bit on dividends usually as well. But it wouldn't excite us, so we would have no interest in it.
Okay. And look at that over 5 years from $1.29, and then
mediocre.
just gone sideways, hasn't it, for 3 years? Done absolutely nothing. Some of those other healthcare stocks that Mark G was talking about, the CSLs, Fisher and Paykel Healthcare, are they getting to a level where they've just been beaten down?
Oh, they're absolutely buyers.
Right.
Yeah, but Fisher and Paykel Healthcare is a wealth winner from our point of view, so is CSL.
Right.
And they're both at levels. I think Fisher and Paykel is showing about a 35% a year return at its current level for us, on our default measures, which is spectacular. I'll just pull it up actually because it's a good question. Fisher and Paykel, FPA.
Mark G on.
Yeah, look, Fisher and Paykel Health is it's an industry leader, world leader. Obviously, they've flagged costs that pretty much have been priced in. I don't think you've got to be a genius to have thought that there's going to be supply chain issues and shipping cost issues. So I don't really understand why it's been beaten down so hard. Healthcare does fairly well in an interest rate rising environment as well, which is upcoming. Yeah. I think it's a good opportunity at the moment for their high quality companies.
They're also not cyclical at all.
Right.
The demand for their products. And the other thing, Fisher and Paykel had a really good COVID. Obviously, so they did really well in COVID. But one of the big things that happened in COVID is their positive airflow machines used in the hospitals. They were getting resistance from a lot of the hospital staff and so on not to use them when they were using incubators and doing what happened with COVID is because of all the problems, they were forced to use all the Fisher and Paykel kit instead of, because there was shortages of ventilators. Hello, it worked better. So there's been a significant uplift now in demand, particularly on consumables, for Fisher and Paykel's traditional positive airflow
Right.
equipment, all because of COVID.
Oh,
So
that's
it's sort of
interesting.
accelerated the market. The other thing they're doing is building a new factory in Mexico, and I think another one in New Zealand as well.
Right.
So the capex is part of why they've been beaten down. We look at that as being good.
Right.
Because what management's saying is we are so confident in our growth prospects over the next 10 years, we're adding capacity.
Okay.
And so why is that a negative? Because that's what the
Yeah.
market does. The negative
Yeah.
goes, oh, that's not good. That's going to maybe they won't make as much money next year. And you go, well, on a 5-year horizon, both of them are cheap.
Oh, okay.
Yeah.
So are they competing with ResMed?
They do. They do.
Right.
But only about roughly Fisher and Paykel's about 30% CPAP and
Right.
70% hospitals.
Right.
ResMed's about 90% CPAP,
Okay.
10%
Okay.
hospitals. So there's an overlap, and they try and encroach in each other.
Right.
ResMed's
Okay.
a bit more of a data play. We've got ResMed.
Okay, we're coming up. Yeah. We'll talk about that a bit later. So no on Sigma,
Yeah.
but some of the other healthcare groups are yes on.